Alright, so I just wanted to do a quick review um, of, an opportunity. So this is the YM, the top it's the daily chart, the middle is a Renko, I forgot, I think it's a 50 tick brick, and on the right hand side it's a 10 tick. 50 tick, and right hand side is the 10 tick. So basically it's just like a high time frame and a low time frame. Imagine similar to a daily followed by an hourly followed by a 5-minute or 10-minute. But instead it's a daily, a 50 brick, and a 10 brick. Anyway, it doesn't really matter, it's just for clarity. Like, you can use whatever chart you want, but you want the ones that are very clear. So here you have a situation where the market rallied and then came back to test. When it comes back to test, that's when you want to see if the buying is still there, right? Because then the idea is to get in with the buying. So I'm going to take a look at this turning point right here and see how the higher time frame or the high brick size and the lower brick size, how they interact. So first thing is, when you have trend and you have rally, you need to know what levels to look at. So the most common one are the breakout as well as the low from where the buying began. So here, right here is where the buying initiated the up move. So a test of that area is important. And the second area that's important is a breakout. Why are these 2 points important? Here, the pivot or the swing or the turning point or whatever is important because demand overcame supply, creating the pivot, creating the upswing. That's why it's important, because demand overcame supply there. Why is the breakout important? It's for the same exact reason, because demand overcame supply. And this is very obvious because you see here is 77. Look at the volume. It's a no-brainer, right? Like, all that pressure overcame supply and initiated this move. And then on the breakout, you have 24 there against this area, which increases more than the prior break. It's not a lot, but it does increase. Increasing volume from the prior break. So these are the 2 areas where demand overcame supply. That's the reason. So you want to see if demand is still there where demand initially overcame supply. Where did supply overcome demand? Supply overcame demand up here. Why? Because that's where the swing initiated. So it overcame it. So these pivots represent support and resistance points where supply overcomes demand and demand overcomes supply. And you want to take a look at those levels when price returns to those levels to see if the demand is still there where before it overtook supply at that level. So here we have a clear indication of a breakout. It says BO, and you have a test of it. So obviously you want to see the test of the breakout and whether demand is still there. Alright, that's it. So we're going to take a look at how this occurred and how to measure it. So first things first, you take the breakout break and mark it. How do you do that? It goes to just draw a line. That's it. So now we go to the lower brick size and see what happened. So all of this thing was going on and eventually got to that level. What do we notice as price goes to that level? level, that test of the breakout level, you notice, first let's take a look at trend. What's going on? I mean, not trend, but shortening of thrust. This is not really shortening of thrust. Yes, it's shortened a little bit, but not to the degree that I could say it's truly a shortening of the thrust. Right? It's actually over here, but it's so minor that you can barely see it. It's so small you can't even see it over there. So it did happen, but it's so small you can't see it. Anyway, so yeah, it definitely did shorten, but it's not visible. All right, it's the 3. If you take a look at the low, it's like a very minor spring, like it's not even noticeable. Can't even be caught by the indicator. So anyway, what about volume? Volume is fairly more clearer, where you see it's diminishing from 46 to 18, eventually goes down only to 1, right? So you can see it halved and then it went down. You said, okay, so as it goes to the level, what does that mean? That means the supply is diminishing, supply is weakening, right? It's that. Now demand needs to present itself. Just because supply is weakening doesn't mean jack. It can come in at any time. Demand needs to take advantage of the situation. Does it take advantage of the situation? It does. And it is visible where? It is visible in terms of everything. In terms of thrust, volume, and distance. Volume is very high. So the 49 is the biggest in 1, 2, 3, 4, 5, 6, 7, 8, a lot of waves. And the distance is also $560. Which is bigger than $240, bigger than $115, bigger than all of this, right? So what does that mean? That means demand is in. It's clearly evident, the price is there, the volume is there. Okay, so on the test of the breakout, we see supply weakened and demand shows its strength. And we also see that trend is formed. How is trend formed? When you have confirmation of a higher high, very clear. Now it doesn't mean every time you see this demand or trigger or signal or whatever, that's going to be a new trend. There's a lot of judgment involved in terms of, taking a look at the level, the test of the level, etc., etc. And the trend on the daily and the trend on the higher time frame, etc. So that makes it very probabilistic. Here, the demand came in and goes up. Confirms. There's the biggest volume in 10 waves, biggest price distance in these 29 waves. There's no doubt that this is an expression of demand, and it has followed through creating trend. So what does that establish? It says at that breakout level, demand is still there. Hey, okay, there's your edge, there's your signal. Now it's only a matter of getting in. So now how do you get in? Alright, I'm not going to go into all of this, but understand that, sometimes you're going to miss the entry because sometimes it won't pull back enough for you to get in. If your stop is over here, you have to be very shrewd on the entry. What is an indicator, meaning what does help you, is that you have identified this area, the high before the low, also known as creek. So this is creek. This is the initial breakout. There's actually a breakout here as well. Look at that 8, right, against this creek area, which is just the high before the low. Anyway, so where does the market come back to test? It comes back to test creek. You understand high before the low, that's where the market comes back and tests. And it's good because when it comes back, it pulls back, it reverses on more volume than any of these bricks. 1, 4, 2, 6, 8, 8, 7, 13. That's very clear evidence of buying pressure. Now, if you have the fortitude to wait for all this shit to come down and then the green break, great. Otherwise, there are other techniques, one of which is just halfway back. So after the trend confirms, you see it goes right to the 50% mark. See that? Because normally the pullbacks, many times they come to a 50%. And in this case, it came right in, smack dab into the 50% mark. I'm not going to wait for all of this. I just don't have the patience. Actually, it's not that bad. It's like from 722 to 812. But on higher time frames, it's like you really don't want to wait. So otherwise you'll be sitting in the chair forever. So here, you see it comes back, halfway back, tests the creek, and reverses on good volume, clearly indicating that buyers are coming in. And then the trend initiates. Not initiate, but continues and goes all the way up here. Alright, so what have we gathered? We've gathered, what have we learned? We learned that you got a rally with trend, with the higher time frame, with the daily, all that, right? Everything is aligned, nothing is contradicting. What is a diversion or counter trending? It's a contradiction. Right? So don't contradict the market. So here you're not contradicting, it's in an up wave, it's in an uptrend, no contradiction. Okay? Forget the other terms, it's like, okay, it's then contradictions, there's no contradictions. And the market comes back to a breakout level, it's the first test of that exact level. As it comes down to that level, you have buying, which it does what? It establishes that the buyers are still there and they are buying. The buyers are still there because they're buying. How do you know? On the lower time frame, whether you use Renko or 5 minute or whatever, you see that the moves are big. The volume is big. But not only on the demand side, you see from a supply side that supply is weak. You need to see both pieces of the puzzle. Supply has to be weak and demand has to be strong. That is what creates the turning point and initiates a trend. And how do you see that evidence? 3 ways to do it. One is the shortening of the thrust, the other is the volume, and the other is the distance. There are other ways to do it also in terms of when you have a daily charts, you can take a look at close to close, the progress in the close, the actual range of the bar also is extremely important because it shows that overhead supply is lifting, allowing the range to expand. Anyway, putting this all together, I think you understand what the idea here is. Breakout, test of the breakout, lower time frame, heavy demand, weak supply, initiates the turning point. Chances are high that the trend will be established or will continue, and that's what happened. All right, thank you.